Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. I'm going to need you to take a look at my screen over here. I am on TFNN.com, and the reason I am on TFNN.com is we're going to go to the newsletters tab right here. Now, every Monday, we are joined by Steve Rhodes. Steve Rhodes is the host of the Trader's Edge Show right here on TFNN at 11 a.m. Eastern Time, and he is also the author of Mastering Probability. Again, you've heard me speak about Mastering Probability quite a bit. I love this newsletter. It gets you a really good idea of what's going to happen Mondays. And then, of course, he has publications throughout the entire week and updates when it is warranted. It is a fantastic newsletter. It is thorough. Strongly recommend checking it out. Additionally, if you've never checked out Mastering Probability before, we have a 30-day money-back guarantee for all first-time subscriptions, so you can check out the newsletter risk-free. Again, strongly recommend checking this out. Steve, how are you doing?
I'm doing great, Jacob. Yourself this afternoon?
I'm doing well. We're getting back into the shake of the work week, you know?
Sort of. 15 days till Christmas.
I know. But I can't think about that, right? Because I have to sit in, we have to focus, we're running, got a lot of stuff going on here at TFNN. And so if I start thinking that, the holidays come, what happens?
I hear you. Just reality kind of sets in.
That's right.
2 weeks. Better start my shopping now.
That's right.
So, one of the questions that I've been receiving periodically over the last several weeks has been, are the markets getting ready to form a major top?
Yes.
And really the insinuation is, are we getting ready for a bear market to begin?
Yep.
So I thought that what you and I could do is that I could share with you what I've observed in trying to answer that question. And it's really this: when markets make major tops, the kind that can lead to bear markets, the daily, the weekly, and the monthly charts each have very defined topping patterns. Those folks that watch the Trader's Edge show know that most times during that hour between 11 and 12, somebody's asking to analyze a chart. Maybe it's maybe it's Apple, whatever it might be. And I'm always taking a look at the daily, the weekly, and the monthly time frame. Some people might wonder, well, why does Stevie always have those charts up there? And the reason is because what I'm really trying to identify or understand are major tops out there. And so now that also means when I show you these patterns out here, that doesn't mean that every time the pattern is present, that it leads to a bear market. But when those patterns are present, that's always been the signature of a bear market. Does that make any sense?
It does, absolutely.
Perfect. Okay, good, because I don't want to confuse people right off the bat. So why don't we begin with the 1929 stock market crash? Now, I don't have time to show everyone every single bear market that's transpired since then. But what I can share with everybody is I have gone back to the Dow charts back to 1896, and I have identified and analyzed every single, when I say a bear market, more than a 20% move to the downside. And these chart patterns have been present. Here's the daily Dow charts. This is the daily, weekly, and monthly Dow charts, Jacob, that take us back into 1929. And if we take a look at the daily time frame, one of the patterns that I refer to is the Rhodes Momentum Indicator. It's RMI for the abbreviation. It formed one of those RMI tops on September 12, 1929. And it did it with a bear sash candle. This is a 5-step pattern that I teach subscribers out there. If you've not subscribed, it is really worth your subscription for at least 29, 30 days because you've got a free trial out there.
Absolutely.
And I will teach you this pattern. The weekly time frame for the Dow also had a Rhodes Momentum Indicator top, and that ended, and that was for the weekend, September 6th. And then finally, when we got to the end of September, we had another confirmation of a Rhodes Momentum Indicator top for the monthly time frame. So all three of these charts had that Rhodes Momentum Indicator. What's the Rhodes Momentum Indicator out there? As I said, it's a 5-step process. We use Japanese candlesticks. We use time. We use a relative strength indicator. It's just simply worthwhile for folks who subscribe to Mastering Probability. I'll show you what it's there. You can manually do this for a handful of instruments that you track. What I've got on my charts are all automated tools because I know what it is to look for and pick up. If we go to the 87 crash, I've just picked out just a few major tops that most people are familiar with. If we go to the 87 crash out here, what we will see is that the daily Dow, and I'm just using the Dow charts out here for the time being, it formed a Rhodes Momentum Indicator top on September 1st, 1987. On October 5th, the daily Dow, and so if you're over here on the left-hand chart, it's really up in this little cluster where my cursor arrow is at. To give you a second time that there was a top, and it was a lower high, it was a TD9 count top that formed on October 5th for that daily time frame. The weekly time frame, it formed a Rhodes Momentum Indicator top on August 28th, 1987, and the monthly formed a TD9 count top in September, right up here where it's got this TD9 count in September of 1987. So there was plenty of evidence, plenty of warning shots out there to be careful, to be cautious. But those patterns were present. And what's also kind of interesting here, Jacob, and I didn't realize this till I pulled it up and started working on this yesterday, was that the 87 crash out there occurred on October 19th. That's this long, wide-ranging red bar out there. If you take a look at the bar just before that, what number do you see?
Right there.
Number 9. The TD9 count pattern, which is another pattern that I teach to folks out there, identified the bottom. The top or bottom of a pattern, in this case here we're looking at a bottom out here, the low needs to occur on bars 8, 9 to the bar following bar number 9. That was a major bottom, a major low out there. So again, another tool that I teach. Somebody might say, what's a TD9 count pattern out here? And the best way for me just to kind of describe it, I guess metaphorically, is picture a 100-yard dash. Picture yourself doing a 100-yard dash, and you're going to give your all. That's just 100 yards. What are the chances after you're done running you're going to fall on the ground out there? Because you've used all your energy.
Right.
In fact, if you go back and take a look at the 1987 crash out there, used all that energy, yet bottomed on that day. Again, that doesn't mean that every single Rhodes Momentum Indicator, top or bottom, is doesn't fail. And the same thing with the TD9 counts. But what it does do, it gives us an edge. It means that we can take these charts, we can take a look at these bars, and we can identify topping and bottom signals out there. We take a look at the 2000 top. January 18, 2000, Dow forms a Rhodes Momentum Indicator top. The weekly, end of January 21st, 2000, also Rhodes Momentum Indicator top out there. And then the month of September, also confirming a Rhodes Momentum Indicator top. Again, we've had all these patterns. They're present They are present at every bear market. They're also present at tops. When these form, that does not mean we're going to have a bear market, but when all three show up, daily, weekly, and monthly, I'm telling you that the hair on the back of your neck is just simply got to stand up out there.
Sure. Just
knowing for that, especially on the monthly time frame. And because on the monthly time frame, there's fewer of those signals that are out there. So you really pay attention. If we take a look at the 2007 top, the daily Dow formed a Rhodes Momentum Indicator signal, followed by a weekly Rhodes Momentum Indicator top on the 19th. And the month of October also completed a TD9 count as well as a Rhodes Momentum Indicator top. Again, that was the 2007. If I went back to the 2020 COVID crash, it also had those patterns present. Take a look at the Nikkei 225. So it doesn't just apply just to the Dow. If we go back to the major top that formed in 1990 in the Nikkei, and you take a look back here, it was a Rhodes Momentum Indicator top on the daily, a TD9 count top on the weekly, Rhodes Momentum Indicator top on the monthly. It took decades. We just got back there this year, back to those highs in 2020 and 2024. I believe it was maybe the first quarter of this year when price finally got all the way. Gold. In 2011, we had a huge run-up in gold. Well, guess what ended that? On a daily time frame, a Rhodes Momentum Indicator top. On a weekly, a TD9 count Rhodes Momentum a TD9 count top. And on the monthly chart, it was a Rhodes Momentum Indicator top. These patterns, when they are present for all three time frames, folks, it really wants to make you be very, very cautious. So what we can do, if you'd like, is when we come back from this break, we could go take a look at where are we at right now with the Dow, the S&P, the NASDAQ 100, maybe a few other things out there.
Absolutely. Steve, please stay right there. Folks, we'll be right back with Steve Rhodes. Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by the host of the Trader's Edge Show on 11 a.m. Eastern Time right here on TFNN and the author of the Mastering of Probability newsletter, Steve Rhodes. Steve, before we went to the break, we're talking about movement up in the Dow as a potential topping pattern, looking at the daily, the weekly, the monthlies. I really loved the analogy to basically a physical system with these stocks, right? Or with these indices in particular here. But it really works like that, right? I mean, you get massive, massive moves to the upside. Let's say you're looking at just a standard standalone equity, right? And you get unbelievable volume, just keeps pushing up and pushing up and pushing up. At some certain point that system gets, there's not enough buyers, right? Same thing when you keep selling and selling and selling and selling. There just ends up not being any sellers left, right? So I really like that perspective. I'm not saying that's, I'm obviously putting kind of my thought on that a little bit as well, so not
but it's a good thought.
for you.
But it's a good thought.
Yeah.
Because what you're talking about there, really, or how I would interpret what you said, it's really about emotion. The stock market is really about emotion, right? Whether it's emotion to the upside, emotion to the downside, and emotion is nothing more than energy. So you're right. I mean, it really is all about energy. And like we use as an analogy for a TD9 count, picture yourself doing a 100-yard dash.
Yep.
I'm not a young pup anymore, and I can only imagine running that hard, as hard as I possibly can. When I'm done, I'm probably not going to be standing.
That's right.
It wouldn't matter whether it was a marathon and you conserved your energy that way or whatever it is. It's all about, the use of energy. So how do we identify when that use of energy is done, when that emotion is done, either to the upside or to the downside? And in essence, that's really what the Rhodes Momentum Indicator tool is doing, the TD9 count tool is doing. There's another tool. So since you brought that up, there's another tool that I use that I teach. I refer to as the oscillator unchanged line. And on my charts, you'll see it as either a green or a red squiggly line. If we take a look at 2024, and the reason that I developed that tool, the tool originally came from Sherman McClellan. He's the first one I think that may have identified it. The reason that I used that tool was I wanted to know when a retracement was just a retracement. Right? Let's say you're trading something, all of a sudden you start seeing it move lower. Isn't the question, was that the end? Was that the top? Is that the beginning of the end out there? And so I wanted to create a tool that helped me to objectively, right? Because emotion is all inside this market. If you can't answer things objectively, you can easily really miss what the markets are communicating to us. In fact, when I do a show each day, I'm really just sharing with you, communicating with you what the chart is saying. I've really tried to, I have very fixed levels of tools that identify support and resistance out there. So that's not an objective thing for me to share with you. If we look at the Dow here, the very right-hand panel chart, and you can see where 2024 started out there, look at that green oscillator and change line. Any pullbacks during the year found support at that level. As a long-term trader for 2024, you never received a signal that said maybe you need to lighten up in your loafers out there with regard to your long positions inside of the Dow. And that's what makes that such a cool tool. If I take a look at some others, what wasn't what I intended to do here with this set of charts. We can go switch over and take a look at anything else. But here, with regard to the Dow itself only has a Rhodes Momentum Indicator top for its daily time frame. It's triggered on the weekly time frame, but it requires a bearish reversal candle. That's how the market, Tom likes to say, squawks, walks, and talks to us. That's how the market communicates to us, and it does so with those Japanese candlesticks. So that doesn't mean that price might not pull back to 44,290, but I don't have that top. You can see the lines are triggered on the Dow for the monthly time frame, but we negated Rhodes Momentum Indicator top last 2 months ago. Was this bearish shooting star. So another bearish reversal candle would have to form to suggest that, okay, maybe we are now entering a period if we had all three of those with Rhodes Momentum Indicator signals up there. There's something else that I have identified and developed, and I call it right now the dance steps. I'm trying to really find a different name for it. That just doesn't stick with me, out there.
Sure.
But it truly is how the market dances. So, for example, today is now this is the Dow, but if we were to take a look at the S&P, the ES Mini, today's only day one to the downside.
Yes.
If we take a look at these dance steps out here, and we go down to the bottom left, this is the Dow Jones, and that the black digits are consecutive moves higher. So we're talking about higher closes, and the red digits, consecutive moves lower. In bull markets, what you will see is those moves lower last 1 to 4 sessions out there. If we take a look at back here, looks like in middle of November out there, we can see that we had a 4-day move to the downside. Boom, back up to the upside. If you look at the weekly time frame chart and you come back to the bottom and just simply of August out here, that's as far back as I'm going on this visual chart, we see 1 2-week pullback. Last week was a 1 week pullback. Maybe this week is going to also be a 1 week pullback.
Right.
This is just normal price behavior and movement. It just doesn't go up. It just doesn't go down. And it's really helpful and really helpful to understand those dance steps. Any questions about that? And if not, I can show like the S&P and
I'm following along right with you. And if anyone has any questions, just message me in the den, and I will relay them to Steve.
Yeah. Perfect. Okay, so if we take a look at the S&P 500, what we'll see on the S&P 500 is no Rhodes momentum indicator signal. There is a TD9 count top pattern that is present. So we want to be careful of that. That's from 3 days ago. If people go back and take a look at that high, note that on your pad of paper. If price closes above that, that pattern gets negated. The number is 6094.55. I put it right in front of my face. But I'm looking at the charts, not actually the language that is up there. That's for everybody else to follow on. In the S&P 500, you can see on a weekly basis, we're still above that support level of that oscillator and change line. There's no confirmed Rhodes momentum indicator top. And the same is true for the monthly time frame. So if somebody was asking me, has the S&P 500, has it formed a major type of bear market top? Well, the answer is no, unless this time is different. But as I said, I've gone back historically through every single bear market in the Dow, and they all have this same pattern where you've got a well-defined top out there. Now, maybe people can add their other topping signals. That I don't know. But the ones that I use, for example, the NDX 100 on Friday, the NDX 100 negated a TD9 count top for its daily time frame. It negated a weekly Rhodes momentum indicator top for its weekly time frame. And it negated the month of November, its TD9 count top out there as well. But even though we're pulling back today, the message of the NDX 100 is it wants to head higher and much, much higher out there. So that's what its messages are. Now, the important thing here, and I want everybody, to really understand, our role as interpreter of what the charts are communicating to us is to come back to it at each moment in time, each future moment in time, to see if there's new information. Sometimes the chart patterns change out there. But what I can say unequivocally is that there's no bear market tops for the Dow, the S&P 500, the NASDAQ 100, the types that are present before every single bear market. That doesn't mean the market might not pull back or what have you. It just means we don't have the signals out there that we're ready for a bear market to start.
Fantastic. Steve, that was fantastic as always. Guys, I really recommend checking out Mastering Probability newsletter. So much more from where that came from. And Steve, we'll see you tomorrow morning, I guess, 11 a.m. Eastern time.
Thanks, Jacob. Have a great day.
Thank you, Steve. Take care. Folks, stay right there. We'll be right back.